We're here in Monte Carlo for the Rendezvous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Jean-Paul Conoscente, Chief Executive, Scor P&C. Jean-Paul, welcome.
Yeah, nice to see you.
So it's been quite a year for Scor. What messages are you bringing to Monte Carlo this year?
Yeah, thank you. The first message is relative to Scor. What happened in Q2 on the life and health side doesn't have any impact on the P&C. So we're continuing our strategy on the P&C of developing the portfolio, diversifying the portfolio in different lines of business, and looking to continue to grow with our core clients. The second message is property cat remains under pressure. Has been a good year overall for reinsurers in that space. We're still waiting to see what Q3 holds for us in terms of hurricane activity, but so far so good. But there's been a lot of small to medium-sized losses, and that means that the discipline that we've maintained has to continue, and especially the protection towards the bottom of cat programs is still going to be problematic, I think, going forward. And then the other message is whilst the balance between supply and demand across all lines of business seems to be at better equilibrium, one good year of reinsurers doesn't make up for several bad years, and I think 2025 our expectation is the continuation of 2024.
And how do you expect that message to be received by your clients and by the wider insurance market?
I think they're looking for more flexibility, probably a little bit of adjustments. And I think depending on the relationship overall, we'll be happy to listen to them and accommodate when we can. But I think insurance companies tend to understand that one good year doesn't solve all the problems.
So Scor's one of the big reinsurance companies that's active in the ILS space. How easy is it to manage that relationship between ILS and reinsurance?
I think ILS, in my view, is very complementary to reinsurance. We use ILS extensively as a retro tool, and then we invest for third-party investors in ILS. And I think the ILS market tends to be more in the core of programs. So I think it's very complementary. So far, we don't see ILS, creating tensions as, let's say, going back 10 years ago, where the ILS was very keen to gain significant market share. I think the cat bond market is well established. And so we see the cat bond market behaving more in line with the reinsurance, whereas in the past, maybe there was divergent strategies, but right now they're much more aligned. So, if reinsurers don't have a strong appetite for a line of business or a positioning on the program, it's unlikely the ILS will have a strong appetite and vice versa.
So we're not seeing a situation where ILS and reinsurers are competing as reinsurers try to move further up that
I don't think so. I think that there'll be some cases where a few markets might have stronger appetite for the bottom of the programs. The amount of capacity they provided remains limited. But in general, I don't see a big influence or a big move of capital towards bottom up programs because reinsurers don't want to provide the coverage. The reason why reinsurers don't want to provide the coverage is the insurance product is underpriced, and so the profitability expectations are limited.
And that message suggests that reinsurers are providing the solution that the insurers are looking for.
Well, not necessarily, but I think it's reinsurers are providing a solution that provides the best, I'd say, balance between what they can provide and what insurers are looking for. I think everybody's looking for earnings protection, but if the product is underpriced, earnings protection is really a question of covering a risk that's underpriced, and nobody wants to do that.
So AM Best has a positive outlook on the reinsurance segment globally. Does that sort of reflect your perception of the way things are going?
No, I think it's the positive outlook is because the reinsurance market has remained very disciplined as a market, and I think the expectation is that for that to continue. And I think the rating agency's view is a reflection of that. So I think at least we've been good at communicating. And I think the quarterly results that we produced as an industry is a good signal that the strategy, overall of the market has been very positive.
And it's sustainable.
And sustainable.
Jean-Paul, thank you very much indeed.
Thank you.
For Invest TV, I'm Richard Banks.